There could be an agenda for the RBI as well, Mr. Tiwari. We have a new governor who is the author of the monetary policy framework. Now, there was one huge category of people who thought that the next governor would be one who would start cutting rates very quickly. But we have a governor who has actually put in that glide path from 6 to 4%. What would your, assessment be of the liquidity situation? Transmission was hopefully going to be delivered by greater liquidity in the system. Do you have any trepidation about that? What would your expectation or request be to the Reserve Bank?
Look, one thing which everybody has corroborated is the continuance of the same person from the fraternity of Reserve Bank of India. He has been there for over 3 years now. So continuity would be there. Even if you look from the political point of view, 2019 elections, if you have a new governor, he may come with some different point of view. And getting adjusted to the Reserve Bank would have taken some time. So here is a master stroke, that same person who has been in the system for... So it fits the bill from all angles. And he has been the author of monetary, whatever of late we have said, I think he is going to walk that path for sure. So I don't think that in any manner it's going to be different from what was before.
Okay. Your take, ma'am, liquidity, that seemed to be maybe even a double-edged sword for the banks. It also pushed down yields and therefore, they were taking away a bit of the lending, the markets. Do you think things will continue, or do you expect that liquidity could look different?
No, I think, they did have a different view, and that was what was happening last year. And I think we as a bank, we have been requesting that liquidity should be made looser, not tighter. And I think after they have done it, things have definitely looked better. We have to understand one thing. If the banks are not able to make sufficient profits on their treasury book, where will the provisions come from? And once you have classified a lot of assets, the provisioning is automatic unless you can resolve them. So as I said, if we have to provide for all of these classified accounts, we do need pools of profit. And one way of getting pools of profit is if the yields come down, then the treasuries do better. And that's what we have seen in the first 2 quarters, almost 2 quarters now. So I think this stance that they have taken, that they will bring liquidity to neutral, is very good. It needs to be maintained. As you know, some amount of liquidity will go out with the FCNB redemptions. So it's important for us to have comfort on the liquidity side. And there I hope that the new governor will maintain the same stance. But overall, as Mr. Tiwari is saying, that he was also part of the team that put in place the inflation targeting mechanism. So I don't think anything will change there. In a way, as you can understand, it's a good thing, because if you do not have low inflation, you cannot have sustained growth. For a country like ours, we must have sustained growth. And therefore, inflation is something you'll have to keep track of.
We'll try and revisit this issue of rates yet again if we have time. But I wanted to speak about the stressed assets issue a little more. We have 2 or 3 big people from the NBFC sector as well with us. We have Mr. Hemant Kanodia and Mr. Padmanabh Sinha of Tata Capital. Mr. Sinha, to you first. We have not seen so much of participation of foreign funds in the resolution of stressed assets. In the US, since this is the Indo-American Convention, you have a fairly robust set of funds which pick up stressed assets and turn them around. The names of Wilbur Ross and all are almost legendary. Do you see any such special, special situation funds coming in a big way at all? In the next 12 months, we already have a tie-up with Brookfield and State Bank of India and Aeon and ICICI. More such stressed asset resolution funds?
Yes, I think as you mentioned, firstly, broadly in the alternative space, I guess the US institutional sources of capital are pulling below their weight at this point of time. Unlike, say, in public markets where a lot of the source of capital is American money, in private equity, I think that's not happened. It's likely to happen across all classes, including stressed assets, as we move forward, because India is acquiring a little more salient importance in the global scheme of things, given it's the largest, it's the fastest growing major economy. So if you see people like, say, US pension funds, which are ultimate big providers of capital. Even if, you're talking about a general partner, their sources of capital would include some of these pension funds. They need to accrue portfolio returns at about 9% to match their liabilities. And in the global context of low yields and India proving to be important in the portfolio, I think directionally you would see a lot more flows towards India as they look to increase exposure to India. And that includes stress. As I said, people like Apollo and Brookfield and all are there. And there are others like KKR who have an NBFC structure addressing it. I think there's going to be increasing flow. But that holds, I would say, across various alternative classes, including general private equity. Also, what had been happening was that leverage buyouts were doing very well in the US given very low interest rates. And I think that sort of cycle has peaked now. So there will be a push towards looking towards emerging markets where currency-adjusted returns are seen as good. So the currency plays an important role as well.
Currency, of course, but we have been a picture of stability. If you looked at the 3-year term of Rajan, I think we were at worst at 67, and we are there after 3 years. So it's a very stable currency. Samiran, what's your sense? New governor will incoming PE funds have a sense of security that, given the kind of credentials the governor comes with, stable rupees are given?
Well, if you look at numbers, the whole period of Subbarao's governorship, the average INR volatility was about 8 to 9%. It's now down to about 4%. It's almost halved. So if the same philosophy is followed under the new governor, which is the likely case, then we will probably see rupee being stable. In fact, what I worry is that if rupee remains too stable, then there could be an interest group asking for somewhat of a depreciation of the currency just to stimulate export growth, which is not happening in a slow global environment. So that's the tussle that the governor will have to manage, but I would expect a very narrow range for rupee even going forward.